We have with us Nirupa Shankar, Joint Managing Director at Brigade Enterprises, talking about the quarter. Ms. Shankar, thank you so much for speaking with us. Always a pleasure to have you here with us on NDTV Profit. Let's start. It seems like a bit of a tough quarter because we've seen sales volumes coming down. Are you seeing stress in the residential segment, which is your largest segment?
Yeah, good morning. Thank you so much for having me. It's always a pleasure to be here as well on NDTV. See, this quarter, if you compare it with the previous quarter, we've actually had a 46% increase in our overall sales. We're at 1,821 crores now. And even our collections has been at 1,900 plus crores, which is again a 35% increase over the same time last year. Of course, there's been some slight delay with the launches of new projects, but nevertheless, we've managed to have a pre-sales volume of about 1.68 million square feet. And the good thing is that despite the fact that some of our launches are slightly delayed due to some slowness in approvals, we've been able to capitalize on the cost. Our average realization has also increased by almost 45% from the same time last year. And so overall, we're fairly bullish, and generally the second half of the year is definitely
absolutely agreed. But having said that, in all of H1, your sales volumes are down 10%. You have seen a drop in revenues of 22% this quarter. So just trying to understand, Nirupa, where that pressure is coming from. Is this because of launch delays? Or are you seeing demand peter off in the last quarter and maybe it will pick up in the second half?
Oh, I think demand is fairly strong. I just think it's a matter of us, not launching projects soon enough. And main reason for that is there's been a bit of slowness in getting projects approved. So anyway, we are fairly still bullish about the coming next 2 quarters. And as long as we're able to launch, I think the coming year will be very good.
Nirupa, a couple of other things that have stood out. Your margins have actually expanded quite well, and you alluded to that a few minutes ago. Is this margin expansion, one, sustainable in the second half of the year, or would it improve further, which would be a good thing? And also, okay, maybe you answer this and we talk about the leasing revenue, because that's actually seen a good uptick. So just a quick word on margins, and where do you see that play out?
So margins have been good for multiple reasons. One is because we have launched some very premium projects, especially in Chennai. We've launched Brigade Icon, where the average price per square foot is around 30,000 rupees per square foot. We've re-entered the premium market in a fairly big way, where ticket sizes above 3 crores, 4 crores, and those units also have an average price per square foot of 12,000, 13,000 square feet. So there are multiple reasons for the increased realization, which also leads to the increased margin. One is the segment which we have launched our projects in, and the second is, of course, like I said, there is still strong demand. We're able to increase our prices while keeping the demand intact, and we're also able to reduce the sales cycle. So previously, I would say prior to COVID, we would sort of spread out the sales cycle over the development of the project. But now we're able to sell the project within a shortened period of time while it's still under development as well. So there are 2 factors. You're able to increase prices while demand also remains strong. And like I said, average realization has gone up because of the nature of the prices.
Quickly, leasing revenue was up 27%, occupancy rate stands at 97%. Are you working to increase that part of the portfolio? Because that looks far more healthy than what we've seen in the recent past. And if yes, then where does it take us?
So Brigade has always maintained that we like to keep, a good balance between our residential portfolio, leasing and hotel portfolio. So typically, the residential portfolio can account for about 60 to 65% of our top line. And then the leasing portfolio can account for generally 25 to 30% of the top line, and hospitality also about 10%. So it varies slightly between which cycle we're in. The leasing revenue, you'll always see a better uptick when a project is completed. And during the 3 years or so while it's getting constructed, while we're spending money on the project, you're not really seeing any increase in rentals. So here we've completed some of our large projects and we're starting to see the rentals come in, because even once you finish a project, we have to wait for at least 6 to 8 months till clients come in, do their fit outs, until we see revenue. Now we're finally seeing some revenue come in. The leasing revenue includes our retail portfolio, some facility management business, as well as our office rentals. And, it is a good time. I know office has been getting a lot of skepticism in the last few years as to where is it going to go. But I must say that I think India will hit about 70 million square feet of leased transaction space in calendar year 2024, and out of that, Bangalore should get about 16 million of that, which is the highest that Bangalore would have ever seen. So I would say that leasing is pretty strong. There is demand for major cities. Bangalore, of course, Mumbai are all seeing demand for office space right now, and I think Hyderabad as well.
Nirupa, good morning. Neeraj here. I just have one question really. Because you are at the end of the first half, and you can maybe look out maybe 18 months out, and because quarterly numbers become difficult to track because of pre-sales versus delivery, etc. From what you were in FY24, annuity business and residential sales, what do you reckon you might be at, let's say FY26, 27, what have you, considering that the internals are looking so strong?
You mean in terms of top line or in terms of
or volume growth, volumes, growth factors, what have you?
See, of course, we have to go with where the market is, but typically, again, I can't give too much of forward-looking guidance, but typically we say 15 to 20% growth is kind of what we look at, and if we do better, that's a bonus, but that's the minimum that we would want to achieve year on year.
Just one very quick one, Nirupa. You've managed to reduce your debt quite significantly by about 2,656 crores down to about 850. Now a very healthy net debt equity ratio. With your new projects that are coming up, how do you plan to finance them? Is it going to be through net debt, or do you plan to continue to maintain low leverage? And then, of course, look for partnerships and equity.
So, see, we've already finished our QIP recently, so we've managed to raise some equity there. But with regards to the debt, I would say that our residential business, because of the healthy cash flows that it has, we are pretty much zero debt for our residential business. Most of the debt that we have is also securitized. I would say 81% of all the debt that we have is securitized. The balance is for ongoing projects and for construction finance. All our future projects, especially the capital expenditure heavy ones, will require some construction finance, so that we will get project to project. We managed to keep our cost of finance also fairly healthy. And it'll be a combination of accruals and debt for future growth.
Nirupa, if we may, we have Parag Thakkar with us, and he's been tracking, of course, the space very closely, and he wanted to ask you a question, if that's all right.
Yeah, of course.
Yes.
Yeah, hi Nirupa. Thanks a lot for taking my question. In fact, Brigade was one of the largest holding when I was in ICICI Pru. So
that's nice to hear.
We have a huge respect for your company. Just one question, that you said that approvals were getting delayed, right? Now that approval cycle has revived, because now that election has already happened, and now we are 6 months after the election, the approval cycle has started to revive, because that will actually determine your sales and revenues and etc. Right?
Yeah, I think it's getting better, but there's some slowness that sometimes is out of our control. But I think we should be able to launch about 16 million square feet within the next 4 quarters. So that we'll see a very healthy performance once we're able to launch, because a lot of the projects that we have waiting in the pipeline, we already have certain expressions of interest. So we know that there'll be very healthy demand for the projects as soon as we launch them. And the idea is to incorporate a healthy price rate, so start at a good average price realization, so that in case the demand is very strong, we're able to sell out those projects as quickly as we can. So we are expecting to launch about 16 million square feet in the next 4 quarters.
Thanks.
All right. Thank you so much, Nirupa, for coming and speaking with us and answering all our questions. Look forward to what Brigade is doing. And of course, the rise of the real estate market in southern India is also a very interesting story. Brigade stock has actually recovered a fair bit from its lows of the day. It's about 0.5% down now. And clarity coming in from the management that the concerns were approval delays because of the election cycle. That is set to improve.